So Lynn has been, I've received this, so Lynn has been awarded a Paul Harris Fellow +4. So I just want to thank Lynn for his contributions to the Rotary International Foundation over time, and he gets a nice little upgraded pin. So Lynn, thank you for your contribution. And with that, sometimes I always seem to forget this part, visiting Rotarians. We have the lovely Kate at the microphone.
Where are you?
Okay, and visiting guests.
All right, we have guests. I'd like to introduce Derek Ragusa. So Derek is the fairly new Director of Advancement. Okay, we say development, but advancement we call it now. So in the Mary Campbell Center, which we all know and love. So take a look at our club. So welcome, Derek.
I'm pleased to welcome Tony Munger's guest, Kyle from Bryn Mawr Trust, visiting us today, and I'm going to apply the pressure, hopefully a future member. Thank you. Good pressure.
Anyone else? All right, thank you very much. Our program chair today is Tony Munger.
Good morning, everyone. Is this on okay? Good morning. Happy New Year, and thank you to everyone coming out early, cold, dark morning.
The microphone's not starting off to a good year, apparently.
Yeah, is it, well, I'll try to speak up against my nature. Here we go. How's that? There we go. All right. Good morning. Thank you all. We're very fortunate this morning to be joined by my colleague at Bryn Mawr Trust, J.C. Fernandez-Seone, with a very timely topic about the U.S. dollar at a crossroads. J.C. heads up our foreign exchange desk and has really deep knowledge in this area. Please save time for Q&A, and J.C.'s gracious enough to stay behind for 15-30 minutes for any follow-up Q&A and just all our fellowship. So thank you again. J.C.
Hello. Thank you. Thank you, Tony. And thank you, all of you, for inviting me. I'm really honored to be the first guest speaker of the year. First of all, I think there's some echo, right?
Yeah. Just leave it that way. See if I can disappear that.
Yeah. First of all, disclaimer: I'm not an economist. Although I trained as an economist. I did my major in economics and my master's, but I'm a practitioner of financial markets. I've always worked in trading floors, first in Europe and later in the US, buying currencies for the bank as a trader, and later as a salesperson, helping customers, corporates, institutional customers execute foreign exchange transactions and manage foreign currency risk, generally with derivatives. So this is not an economics forecast. I saw on the title is forecast. Maybe it's a very long-term forecast because I'm going to talk about the dollar and what's happening with the US dollar. And in terms of forecast, I always tell my customers that banks like to give you ideas of what I think the dollar's going to do, the euro, interest rates. Nobody knows, right? It's anybody's guess. So I think what it's important for people like me is to point out what are the variables that we should be watching, and then everybody decides, what the view is on the currency. So why the dollar? So as you might have seen, the dollar has dropped significantly in 2025, right? And there's been a lot of talk about whether this is another step in the terminal decline of the US currency. There's some countries that want to create their own currency to compete with the US dollar. So My objective in this presentation is to give you some pointers and give you some of my thoughts from a historical perspective. So that's why I say it's not economics. We're going to talk a little bit about economics, as you have to, but mostly a historical perspective, all right? So, okay. So first things first, the dollar is still the predominant currency in the world, bar none. The US dollar has, and we're going to talk about reserves in a second, 6 out of 10 currencies or assets in central bank reserves are US dollars. In financial markets, transactions, foreign exchange transactions, 88% of transactions have the US dollar on one side of the transaction. About more than half of the invoice, global trade invoice is in US dollars. And capital markets as well. The US dollar has the deepest, freest, more transparent capital markets. Most international loans, most international bonds from non-US countries are done in US dollars. So that is a fact, right? There's no competitor today for the US dollar. So why are we talking about this news on newspapers and TVs about the fact that the dollar may be just in decline? Well, 2025 was quite special for many things, but in particular because the dollar dropped about 10 to 12, 14% depending on the currency in 6 months, which was the fastest drop since the 1970s. The 1970s is the beginning of floating rate floating rate currencies after the Bretton Woods, the fall of the Bretton Woods and the gold standard. So, and my job started in 1970s because managing foreign currencies, thank God for that. So in 1970s, since 1970s, the dollar has never dropped so fast in half a year. And it was 2025 was the year that the dollar dropped the most in the last 8 or 9 years. So what happened? First of all, interest rates. Interest rates is the main driver of currencies, especially G7 main currencies. We're not talking about the emerging market currencies like Brazil and Argentina, but for main currencies, the sterling, the Swiss franc, the euro, the dollar, higher interest rates means that capital flows come to the US and that pushes up the dollar, right? The Fed started cutting rates, as you can see on the chart, about a year ago, and that has been basically negative for the US dollar. The second reason is trade policy. As you obviously know about Liberation Day, April 2nd, 2025, that was a massive, it had a massive impact on the US currency. I don't know if you can I hit the arrow? I don't know. Oops.
I'm not sure if it has a laser or not.
Can I just hit the
Yeah, you can move around, feel free.
No, you go back. This one. You can keep this. With the mouse. There's a lot of arrows, so if it doesn't work, it's going to. Yeah, yes. Thank you. So there's no economic or academic study that says that tariffs are good for the currency. Before the tariffs were implemented in April, most banks thought that the dollar was going to benefit from tariffs because tariffs means higher prices mean higher inflation potentially, high interest rates, therefore higher currency. Does that not happen? In fact, it has a negative impact. The market also thought that because of higher tariffs, it was going to have an economic slowdown in the US. This did not happen. The latest numbers were very good. But the market anticipated that the economy was going to go down. The third point is that China, that was very surprising for me, being from experience, China could have said, well, you raise tariffs for Chinese products, we're going to let the currency slide, because that compensates, right? We're going to make cheaper products to compensate for higher tariffs. China did not do that. In fact, the Chinese yuan has gone up since tariff day, Liberation Day, and we'll talk a little bit about this, why, in a second. And also, you know, again, the dollar is, the value of the dollar is against other currencies. Europe had a very a massive investment, or is planning to invest in infrastructure and defense spending, and driven by Germany, which generally, as you probably know, Germany is a very conservative country in terms of monetary policy and fiscal policy. And if you can hit the arrow again, sorry. Yeah, so the German infrastructure and defense spending, you can hear me, in March 2025 was quite significant, because Germany is a very conservative country. Before the euro, we had the Deutsche Mark, which the euro basically was an attempt by other currencies to become the Deutsche Mark, very stable currency. They don't like debt in Germany. I don't know if you have, you know, someone here from Germany originally, but the credit card usage in Germany is one of the lowest in Europe. They don't like debt. There's no relief for tax, for interest payments in mortgages. They don't like that, right? Home ownership is less than 50% because you need a mortgage to buy a house, compared to, let's say, Spain is 75%. Eastern Europe is much higher than that, right? So actually what was interesting is that they basically loosened the constitution, or they suspended one of the clauses in the constitution that limits debt as a percentage of GDP. There's many reasons for that, economics. I think that there's one reason that I haven't seen anywhere, but this is my thought, and that's why it's not written there, but you can see it here. The rise of the far right in Europe. You know, every country in Europe is seeing a rise of the far right. And in Germany, you know, of all countries, 20%, between 20% and 22% of the Germans plan to vote the AfD, which is a far right, probably the most far right of the all European parties of the same political side. You know, France, they should be winning the next elections. UK, Italy, Spain, a little bit less because of the recent history. But the rise of the far right, I think the German political parties saw the writing on the wall. So we need growth, we need employment, we need investment, because otherwise the far right is going to continue growing in Europe. So yeah, AfD is the German far right. Can you press the at the bottom one. Maybe if there's a mouse, I can. And so, and of course, one of the main reasons for this volatility in the dollar is the Trump administration, the policy of America first. I think if you are China, if you are Russia, if you are India, and you see that the US is using the power, the economic power, the monetary power to achieve domestic goals, every country does it, but the US is the biggest country and the most powerful country, then obviously you think twice before having a bunch of US dollars as a reserve asset. The Crimea first, yes, but Ukraine in particular, you know, when the US decided to cut off several Russian banks from the SWIFT payment system, that was a massive measure. And because if you are cut off from the SWIFT system, you basically cut off from the international payment system in US dollars. Can you click again? Sorry. So, okay, no, I think we lost it. Let me just tell them. All right, so let's look at reserves, because one of the ways of looking at whether the currency is relevant or not And the role of the currency is looking at the reserves. What are reserves? I just put the IMF definition. Basically assets that central banks have to intervene in the market. If they need to defend their currency, they're going to sell dollars, generally dollars, and buy their own currency. Or the opposite, right? They buy reserves and sell their own currency. It's a tool to manage the balance of payments every country has. So the reserve assets are, which currencies? Generally, it's currencies. You also have gold. You also have SDR, which is IMF reserve. But the assets the most important part is to be liquid and to be easily marketable. You need to be able to very quickly sell US Treasury bonds, basically sell dollars to buy your own currency. So the US dollar is the main reserves. Who owns the most reserves? Unsurprisingly, big exporters, that they receive dollars from the rest of the world, and instead of selling those dollars, they basically buy US bonds. They finance basically the US budget deficit, or the global debt in the US. We'll talk about China and Japan in a second. So the question is now, what's happening? You see here in the chart the evolution of the share of reserve of different currencies and gold. Of course, gold was in the gold standard system the main reserve in the early 20th century. And you see the growth of the US dollar here, and it's kind of plateauing. And then this is the euro, right? Before the 1999, with the French franc, German, etc., the euro becomes a reserve currency in the early 2000s. But the interesting part is that for the current level of reserves, current level of dollar, the share of US dollar reserves, is at the lowest in 25 years, with 56.9%. And it's a constant trend, except from these bump here, which is the European crisis, where we thought that the euro was going to disappear, or some people thought the euro was going to disappear. The trend is, is very significantly down. So why currencies rise and fall? There are really, I think, four main criteria, four main variables. First of all, you have to have obviously a high economic output and dominance in global trade. And you have here a few examples of the main global currencies that mostly linked to empires, right, from Rome to the Spanish Empire, the British Empire. Stable value, liquidity, transparency, political institutional stability, and obviously military power, geopolitical power. So a good example is the Spanish Empire. It's really the first global currency, the Spanish dollar, the Spanish silver dollar, which is where the US dollar comes from, actually. It was the first really global currency after Spain discovers the Americas in 1492, early 1600s. And they start mining silver and import it to Spain, and Spain basically spends all this money in military power, in armies, in financing the budget deficit. The silver dollar becomes legal tender in the US until 1857. Right? So it becomes a legal tender. You can actually pay your taxes with Spanish dollars. It's also the same thing in China. China didn't have a lot of silver, so they used the Spanish dollar. It's really the direct ancestor of the US dollar. Now, just interesting why the Spanish dollar became so predominant. Again, stable, 27 grams of silver, very stable. About 93% pure silver, each silver dollar. And it was accepted everywhere, right? Just fun fact, there's two explanations where the dollar sign comes from. The first one is that it's written peso, like the peso is a weight in Spanish, and that's why the peso was the currency, like PS, and then it became mingled like this, lost the loop, and it became a dollar. And the one that I prefer comes from the coat of arms of Spain, which was actually in the silver dollar, which was these pillars, the pillars of Hercules, which were symbolizing Gibraltar in the south of Spain, which was the door to the portal to the New World. And the Spanish king said, they added plus ultra, meaning more beyond, meaning that we are, the empire that goes way beyond Europe and the known world. So from the Pillars of Hercules, you have these lines here that becomes the US dollar. You can see it on the you can pick whatever you like. I like the second one, it's more fun. But it's probably in between the two. If you can, yeah, thank you. Keep going. So the reason why currencies decline. Now, first of all, this is the most important one. If you can click here, that inflation and debasement. You all know the history of the Roman Empire. This is a chart that shows the content of silver, the silver content of the Roman denarius. Actually, funny, in Spain, money is dinero, it's denarius. And you see that from 90% silver, it became basically 5% in like 300 years. So, the Roman empires, basically, emperors would basically print more or coin more denarius with less and less content in silver to pay for the troops, etc. So the second one is fiscal strain, excessive spending wars. Then you can take the Spanish example. Spain managed to become the biggest empire that the world had seen in the early 1500s to 4 bankruptcies in 50 years, from 1550 to 1600, because of overstretching in military and spending. They basically inflation. This is the prices in Toledo and Sevilla in 1520 to 1650. They multiply by basically 5, right, in a little bit more than a century. Right. So how is the dollar holding up if we look at these criteria, right? First of all, in terms of inflation, debasement, yes, there's inflation in the US. It's not hyperinflation. It's a little bit higher than Europe, than the Swiss, the Canadians. But there's the inflation is controlled, right? I think people trust the Fed to control inflation, sometimes late, sometimes not enough, but there's nothing like we've seen with Rome or with Spain. Now, this is a bit more concerning, the fact that the US is using the currency and the international payment system to achieve political goals. And the tariffs is an example, the SWIFT measures as other examples. So the Fed, I think that's something that is, I think, a real concern for financial markets, is that the current government is, whether you're pro Trump or not, the government is extremely interventionist in the economics, right? They basically try to use any measures at their disposal to achieve their political goal. Some, as you might have heard on the left, say that it doesn't matter, budget deficits don't matter. It's a modern monetary theory. As long as you borrow money in your own currency, you can always print the currency, right? Which is true. If Brazil had a massive fiscal problem and default, or Argentina, is because they used to borrow in US dollars. So when you don't have US dollars, you have to default. But if you borrow in your own currency, like Japan, for instance, Japan has a massive debt, but they borrow in Japanese yen. So the question is that, up to what level? I mean, if you keep printing money, the US government borrows, issues bonds, the Fed buys those bonds and therefore creates currency, where do you stop? All the wars, to do a parallel with Spain, since 9/11 have not been financed by tax, just by debt. Right? So I would say that is also a concern. Loss of trade dominance is mixed. The US share of world export, it is declining. You see here, the US is in blue. So from 16% of the world exports in the 1950s to now about, about 8% or so. And of course, the rise of China in terms of the share of world exports. So that is a concern in terms of, you can go back to the, sorry. However, the US retains the ability to shape trade contracts and trade rules. And then we have a predominant position in the World Trade Center, World Trade Organization, in the IMF, the World Bank, and we are the biggest importer. And you know, if you are the biggest importer, that means that you have leverage. Right? So this is probably a mix. And technologically speaking, and we'll see Europe in a second, definitely the US is leading technologically the rest of the world. You know, the comparison with Europe is outstanding, and I'm originally from Europe. We'll see in a second, the US, that in that case, there's no concern about this being one of the factors for a decline of the dollar. So what are the alternatives? Because, you know, what will replace the dollar? The Chinese yuan. China plays the long run, as usual. You know, they do seek an alternative to the US dollar. And again, it was a wake-up call when the Ukraine invasion, which is the US basically saying, Russia, go the yuan. The yuan is not a convertible currency. You cannot invest freely and export funds in China. From a trade perspective, you can do it, but if we're talking about the balance of capital account, you know, investing abroad, the Chinese cannot just invest more than, I think, $50,000 a year outside, etc. China controls the currency. The markets and the financial markets are not deep and not liquid and not transparent, obviously, as well. And there's a concern about the rule of law. At the end of the day, China is not a democracy. And the question is, would you like to replace your dollars in your savings in dollars with the yuan, which is a currency from a country that is not a democracy? As you can print here, the rule of law of China is not faring very well. It doesn't matter if it's not legal.
Oh, it's.
I'll share them.
I'm sorry.
It's about 92 in the world, right?
It's coming up on another screen. Let me see if we can do this.
Yep, that was, okay. Yeah, so basically you see the top countries in terms of rule of law, China is about, yeah, you can just go back. Actually, the US is about 20 something, it's not like top 10. Yeah. So there's another topic that you can see this on the news on a current basis is what if China sells all the dollar reserves or part of the dollar reserves? China is the second biggest owner of US dollars after Japan, right? You know, and we see here, actually third now after the UK. What if China says, you know, as a retaliation against tariffs, against the US policy, start selling dollars? You know, the dollar would collapse. Generally, well, that's what the saying goes. You know, the US interest rates would go up because obviously the US will need to borrow those funds and pay more for to cover the budget deficit. So would that trigger a crisis of confidence? The question is, why hasn't China done that? Because, you know, the US has been attacking China pretty significantly and consistently for the last year or so. So, first of all, as some of you work in bank, you know, you can pressure a creditor as long as there's no alternatives, right? In the case that China, they don't have many alternatives. First of all, most of the US debt is owned by allies of the US. China is the only one that is, let's say, not considered, maybe India is depending on the day, but most of the owners of US debt are allies of the US. They're not going to necessarily follow China. There's no country here, there's no currency that has the depth and and liquidity of the US dollar. And we're talking about $800 billion, right? So you need to have a currency. You cannot just buy Swiss francs. There's not enough Swiss francs to compensate the loss of US dollars if China decided to do it. Also China, because they control the currency, it's not a free floating currency, they need to have dollars to intervene. And if the Chinese yuan goes up, they're going to sell Chinese yuan and buy US dollars. If the Chinese yuan goes down too much, they're going to buy Chinese yuan and sell US dollars. So they need US dollars to intervene. Again, a big sale of US dollars, that means that the dollar goes down, the Chinese yuan goes up. That's not good for the exports, for China's exports. And China is struggling to maintain growth at these levels of 6% that they've been officially maintaining for many years. And finally, you know this quote: if you owe $1,000 to a bank, you have a problem. If you owe $1 million, the bank has a problem. Right? The US is the biggest debtor, is the biggest importer, so that is something that China has to deal with. What about the euro? As I said, I'm from Europe. Euro, disappointing story. In 1999, early 2000, became, grabbed 20% of the of the global reserves very quickly, and it has plateaued at that level, between 20 and 25%. It is relevant in 1/3, or it's used in 1/3 of global trade invoices, but mostly in Europe, intra-Europe. In Asia, less than 10%. In the Americas, inexistent. The euro is not a global currency today, it's a regional currency. And why is that? Well, there's a fundamental flaw in the euro, is that it's not a political union, it's different countries, 27 countries. There's not a fiscal authority. In the US, we have the US dollar in Alabama and Chicago and New York, and if there's fiscal transfers, they're going to happen. The Germans are not very happy about financing the Greeks if the Greeks spend too much, or the Italians, or the Spanish. There's not a fiscal authority that's going to manage that. The capital markets are all balkanized, meaning that there's a French capital markets, French bonds, German bonds, Italian bonds, etc. There's a few European bonds, Euro bonds, but they're very, very small. Europe is not a military powerhouse. Each country has its own defense spending. Some of them are, France has nuclear weapons, the others don't. And mostly, and this is a very important, I think, it's very, Europe is laggard in R&D and tech. It's quite surprising that Europe is not able to do that. I recommend to read this report from Mario Draghi, which was commissioned by the European Commission in 2021, in which basically said, I'm not going to go over that, but it's really a terrible, terrible picture for Europe in terms of growth. Europe had about the same GDP than the US 20 years ago, 25 years ago. It's now, the US has 50% higher GDP than Europe. That's in the last 25 years, despite the Euros. Right? And this is, I think, might not be very relevant to the currency in short term, but the mentality is very different than in the US. Half of the Spanish, French youth, they're thinking about working in the public sector. 90% of Germans think that the most important attribute for a job is job security. It's not a risk. It's a very risk-averse culture that is not going to have the EU catch up with this. Finally, the last one, BRICS. Kind of the last one. You know what BRICS are? The group that is made of Brazil, Russia, India, China, and South Africa, and a few other countries like Iran, etc., Saudi Arabia, etc. The BRICS, the goal is to de-dollarize the world, to basically reduce the role of the US dollar. Right? It's a massive group of countries. 25 to 30% of the world GDP, about 20% of global population. They control reserves. They control energy and minerals, especially Russia and Brazil. But really, BRICS is China. China is 75% of the bloc's GDP, 80% of the combined trade flows. right? When we talk about BRICS, we talk about China and the rest. As you know, the Prime Minister of Albania said once in the 1960s, Albania and China together make up 1/8 of the world's population. Oh, yeah, it's really China. It's really China. Most important, there's no joint institution to control the currency. There's a new bank, a development bank, that's been set up by BRICS, but there's not a joint, let's say a Fed. And the question is, again, will you give up the dollar to, you know, basically hold renminbi, a currency that is not freely convertible, managed by a country that is not a democracy? One fun fact, that in the last BRICS summit, the Russians actually advised the participants to bring dollars or euros because the Russian banks did not accept their own currencies, apart from the so. Summary. The euro suffers a fundamental flaw, right? It's the fact that Margaret Thatcher said that of the European monetary system in the 1990s, early 1990s, said it's a half-baked system. You have a common currency, but you have common fiscal authority, right? And it was a political idea. The euro is a political idea. It's not an economic idea. It doesn't, from an economic perspective, it doesn't really make sense, even today. It's a political idea, a way of getting Germany and France to basically become friends again after 2 world wars in the 20th century. China, as I said, lacks all these criteria that are needed for a currency to become a global reserve currency. So I think that in the end, we're going to evolve towards a multi-polar currency system. It's interesting to see that the non-US and non-dollar currencies have become more relevant in terms of global reserves. You know, the Australian dollar, for instance, you know, from 0 to basically 3% of global reserves. The Canadian dollar, the British pound, even, you know, we're nascent as well. The Japanese yen and other currencies. So I think that at some point we're not going to replace the dollar. We're going to have probably the dollar remaining one of the main currencies in global reserves, maybe 50%, going down from 57 to 50%, unless the big geopolitical issue, of course. If there's a big geopolitical issue or war, etc., people buy dollars because it's the safest currency. But if, you know, by that, the idea, I think my idea is that we'll have all these currencies having maybe 10-20% of the pie, and the euro and the dollar having the rest. With the Chinese yuan, probably not going to be much relevant in the near future. All right.
Thank you.
Thank you, JC. Before we all go home to stuff gold in our mattresses, JC will be around for some Q&A. Thank you again.
Thanks. Yeah, JC, thank you for being here. Appreciate that. We ran a couple minutes late. Apologies. As I said, can you stick around for questions? In your honor, we're going to donate a book in your name to one of our partner school organizations, early education centers here in the city of Wilmington. Next week, it's said to be announced. We did have a little bit of a change, someone had to cancel, so we're going to have our own Sheila Bravo from Dana is going to be presenting next week. So looking forward to that conversation. And with that, until then, take care of yourself, and if you can, someone else too.